Sellers on the US housing market are pushing back, and they are not accepting the fact that the housing market is going into a downturn, everyone. This is crazy news. Data from Realtor.com shows that seller delistings are up 47% year over year as of May 2025. Simply put, the sellers, many of whom have had their houses listed for a while, they're now yanking them off the market because they can't find a buyer at the price they want. With some now questioning if this is going to impact the speed of the housing market downturn. If these sellers are going to stubbornly remove their homes from the market, is that going to stop home prices from going down? Is that going to stop inventory from growing? And what's going to happen in the second half of this year? Well, I'm going to cover all of that in this video, starting with where sellers are delisting houses most. You can see this map from Realtor.com shows that Phoenix, Tampa, and Miami are the markets where sellers are pulling houses off the market. And in fact, in a market like Phoenix, for every 100 new homes listed, there's 30 sellers yanking their house off the market. Now, the question I have is this a sign of just how bad the housing market is right now? Because if sellers are delisting their properties 47% more this year than last year, that in and of itself is showing you just how slow this market is. And the fact that a lot of sellers are still disconnected from reality. They still want peak prices. They still want what their neighbors sold their house for 3 or 4 years ago, and they're not willing to accept less. And this type of behavior is actually very common in the midst of housing market downturns. In any type of downturn, actually, even if it's like the stock market or any asset class where prices start dropping, you know, there's this period of denial that sellers have in that market where they say to themselves like, oh, this isn't real. This is no big deal. This actually isn't happening. And I believe we're going through that right now in the US housing market in a state like Florida, where I'm standing right now. This is one of the biggest states for delisting of homes. And the values here, they're down 3.8% over the last year. And you see a lot of sellers when they list their house, like they're not accepting that. They still want peak price. But the thing is, folks, after the period of denial, often comes the period of capitulation. And what I think a lot of these sellers are missing is just the overall trajectory of the market, because the listings and the inventory on the market keeps going up. Same data from Realtor.com shows that we now have almost 1.1 million active listings across the US housing market as of June 2025. That listing count, that inventory count, is now almost back to pre-pandemic levels on a national basis. And in a state like Florida, inventory is way above where it was before the pandemic. And across the entire South, actually, the 16-state southern region, inventory is above pre-pandemic levels. So when you have all that inventory and you have demand still down considerably from pre-pandemic levels, you're going to have a soft housing market. You're going to have home prices dropping. You're going to have sellers getting frustrated. And my fear for a lot of these sellers who are delisting is that they don't understand what they're about to walk into 6 to 12 months down the line. I mean, here in Florida, for instance, everyone, our Reventure app home price forecast is saying minus 6.2% in Florida the next 12 months at a statewide basis. In some areas, we're thinking prices are going to drop 10% in the next 12 months. So if that's the case, why would you delist your home thinking you could sell it for more 6 to 12 months from now? It doesn't make any sense. But this is just the way things go, everyone. Housing market downturns take time to play out. You know, it doesn't happen at lightning speed, because in the end, owning a house, it's an emotional thing. People live there. They have it in their family for generations in some cases. And they get attached to it, and they have a dollar value in their head of what they think it's worth. And to de-anchor a seller from that perspective, often it takes time, it takes years, it takes buyers offering 30% below what it's worth for them to finally understand that if they want to sell it, they're going to have to cut the price. However, here's an interesting question. What if a lot of the sellers on the US housing market don't actually have to sell? Like, what if there's a certain share of listings on the market where sellers are just listing for fun, just to see if they can get a certain price, and if they don't get it, they're just going to take it off the market, and maybe they don't even have to sell in a year. Maybe they can hold for 5 years or 10 years and then sell down the line. And one argument in favor of that is the fact that a lot of owners on the housing market have cheap mortgage rates. Around 22% of all mortgage holders in America have a rate less than 3%. So if you have a rate less than 3%, or you have a rate from 3 to 4, you might not be in a hurry to sell your house. You might be happy to just sit and wait for the market to quote unquote improve. In fact, earlier today I was in a neighboring neighboring neighborhood here in Fruitland Park, Florida, which is in Central Florida, about an hour outside of Orlando. And I talked to one of the homeowners in this neighborhood. And he was telling me how he bought his house in 2018 and that his monthly payment was $950 a month. And I said to him, wow, that's amazing. Congrats. That's a really low payment. He said, yeah. He's like, there's no way I'm ever giving up that mortgage, which he said he had like a 2.5%, 2.4% mortgage. He said, there's no way I'm ever giving it up. And so from that perspective, you can see how an owner with a really cheap mortgage rate might list their house for some price, and if they don't get it, they'll just pull it. They don't care what's happening in the market overall. However, there's an issue with that perspective, everyone, and that issue ignores the overall situation going on in the market. Because every day that passes, fewer and fewer mortgage holders have a cheap mortgage rate, and more mortgage holders have an expensive mortgage rate. So right now, there's around 20% of mortgage holders that have a 6% rate or higher. You can see in the next couple quarters, we're gonna actually have more mortgage holders in America with a rate over 6 than a rate under 3. And that's just because even though the sale transactions are really low, there's still around 4 million homes being sold on the existing market every year and another 600,000 from the builders. So there's just more homes entering the supply at a 6+% mortgage rate. The point is, with each passing day and month and quarter, the mortgage rate lock-in effect of all these low-rate mortgage holders influencing the market decreases. And in fact, there was a lot of people who bought the last 3 or 4 years at 6 or 7% mortgage rates because they thought they could just refinance when rates went down in the future, and then rates never went down in the future. Now I'm setting out on a road trip right now, everyone. I am currently in Fruitland Park, Florida, which is in Central Florida between Orlando and the Villages. And this is where I'm starting my trip. Over the next couple weeks, I'm gonna make my way up throughout the Southeast. I'm gonna be recording on the ground from different housing markets, live housing market reporting, so you guys can see what's going on, how much prices are dropping, or maybe they're even going up in certain areas still. I wanna bring it all to you here on this channel. You guys can let me know where you want me to go. I think it's really important for me to go on these trips because, you know, while I bring you all the data in every single video, no matter where I am, is really seeing the listings live and talking to people on the ground, which gives you that full perspective on the market. And one perspective I'm getting, you know, being here in Central Florida, is that this downturn in Florida has spread to almost every part of Florida. So, you know, it started in Tampa and St. Petersburg and Sarasota. It started maybe in parts of the Panhandle, but now it's all across Florida. Prices are dropping literally everywhere. You can see this data on Reventure app is showing home values are down in pretty much every single county year over year in Florida, even in Orlando, even in Lakeland, even up in the Villages, even in these areas that maybe aren't as negatively impacted by severe weather or where the insurance rates aren't that high, we're seeing values drop. And that's all due to inventory. There's 179,000 homes on the market in Florida right now. That's 30% more than Texas in second place, and that's more than double the third place state, California. So there's just so much supply on the market here in Florida. We have a 10-year record of supply, while demand is down about 15% from normal. So if you have a record in supply and demand's down 15%, you know what that means? Home prices are gonna drop. But funny enough, everyone, I am coming to you from like one of the only zip codes in Florida where Reventure app is actually forecasting values to continue stabilizing over the next year. In this zip code, 34731, you guys should get your mobile apps out if you have the Reventure mobile app and type that zip code in, 34731, that's where I am right now. You should follow along if you have the Reventure mobile app. If not, download it after this video. And you can see here values are down 1.5% the last 12 months. However, if you switch it to the Reventure price forecast, we're actually forecasting stable prices in this zip code over the next year because the inventory isn't that high, the price cut rate isn't that bad, and the days on market isn't that bad. And so it's funny how I just kind of stumbled upon this one area, this one zip code here in Central Florida that seems to be doing a little bit better than the rest. And kind of going around anecdotally, I think I can see why. The prices here are a bit cheaper than they are in the Villages and are a bit cheaper than they are in Orlando. So I think people from both Orlando and the Villages who are looking to save a bit of money, they're coming here to Fruitland Park. We'll have to see if this market keeps maintaining relative stability. I did see in some of the neighborhoods I went into a bunch of investors that had homes up for rent, particularly Wall Street investors. When you see Wall Street investors, that means that often there could be some downside in prices. You can see here we got a for sale by owner sign here. I've actually seen a bunch of for sale by owner signs here. Maybe you have more homeowners here who are deciding not to list on the MLS, I'm not so sure. But in particular, one neighborhood I was just in before this, there was a house on the market for rent at $2,400 a month. And this house was owned by a Wall Street investor who had bought it in 2022 for 340 grand. So they bought it for 340 grand and they're trying to rent it for 2,400 a month. Originally, after they bought it, the rent was 2,600. They've now cut it to 2,400 over 3 years. So that's not such a good sign from the investment perspective, right? If you buy a house to rent and then over 3 years the rent drops, that's not very good for you, especially when the property taxes and insurance no doubt are going up. And that investor house was vacant when I saw it. It was in a neighborhood where there was about 3 or 4 homes on the market for sale in a short radius around that house. I think there was also one foreclosure. And the foreclosures, that's an interesting thing to talk about because we haven't yet seen a big surge in foreclosures yet in Florida or most of the Southeast. We've seen the inventory go up, we've seen the mortgage defaults go up a bit, but the foreclosure rate is still low because the US government for a while had been blocking the foreclosures, particularly on FHA mortgages. Now the foreclosures in the second half of this year are going to start to be let loose. I believe it's by September 2025 that FHA foreclosure backlog is going to start to get released. And when that happens, I wouldn't be surprised if we see more new listings, more foreclosures pop up on the market. But overall, we still have a pretty low foreclosure rate across the US. The mortgage default rate is back to normal, but the foreclosure rate is still below normal and well off the peaks that we saw in 2009, 2010 in the midst of that last housing downturn. In certain parts of Florida, everyone, in that last downturn, the foreclosure rate was at like 12% of mortgages in certain markets. Like 1 out of 10 houses had a foreclosure. Crazy, that last downturn. I don't think we're gonna see that again, but I don't think we have to see that to see big declines in prices. The values here are already going down in almost every part of Florida. They're now starting to go down in Georgia. They're now starting to go down in North Carolina. They're now starting to go down in Tennessee. So these prices, even without foreclosures, are starting to drop. You have to ask yourself the question, if the foreclosures ever do pick up meaningfully, what's that going to do to prices? And I think one thing to think about, bringing it back to these sellers who are delisting, is you have a certain segment of the market that doesn't have to sell and they can just take their home off the market. But then you have another segment of the market that does have to sell. Maybe it involves a divorce, or maybe it involves an estate sale, or maybe it involves someone losing their job and running out of money. There's 2 sides to it. There's what you see listed in terms of what the seller's asking, and then there's what the houses are actually selling for. And I would encourage you not to be discouraged if you look on Zillow or you go to an open house and you see a house that's listed for too much, or you see a seller still trying to make 10% over the last 3 years on their purchase, and you guys know that market has gone down. Don't be discouraged. Instead, I would encourage you guys to make offers on houses right now. If you are intent on buying, I think now is the time to actually make aggressive offers at prices you feel comfortable offering. And you'd be surprised, I think, in some circumstances, what might get accepted by sellers. And ultimately, these sellers also need the information. I've talked to some realtors in Florida about this, how it's a frustrating fact that some sellers just come to market at a really high price, not knowing the market. But if you don't make any offers as a buyer, they get no offers, they have no information about where the market is. And so, my one message to you guys would be, if you are really looking to buy in the next 3 to 6 months, don't get discouraged if you see sellers come to market high. Rather, understand what you can afford, understand what you think the house is worth, and understand where the market's going in that area over the next year, so you can actually make an offer that's fair and backed up by data. And it's crazy just how different neighborhoods can be in terms of our forecast on Reventure app. Like I said, where I'm standing right now, 34731, we're forecasting stable prices in the next 12 months. But if we go just to the south of here, to Leesburg, we're forecasting -8% the next 12 months. The inventory is through the roof. And so real estate is also still really local, everyone, and there's different dynamics at play depending on where you look and what city you're in and what neighborhood you're in. So what you guys should do right now is download the Reventure mobile application for Apple or Android. Take out your phone right now and download that, and then upgrade to our premium plan so you could see our 12-month price forecast. You could see here on the screen what the mobile app looks like, and you can see our forecast on every single market report scorecard. That's a forecast of the percentage change in prices in the next 12 months, backed up by data on inventory, price cuts, and DOM. Our forecast has been very accurate the last several years. We're above a 70% correlation coefficient at the metro level. There's no other forecast that's this accurate and widely available to you as a home buyer and investor. So download that Reventure mobile app no matter what, so you can track along in these videos as I go on this road trip. But then if you are buying this year, upgrade to see the forecast over the next 12 months and use that forecast to make a smarter offer and save money on your home purchase.